来翻译。 Okay. Good evening, everyone. I hope I can be heard.
Yes.
Okay.
Yeah.
Okay. In fact, my name is Mustafa Aminu, and I am the facilitator for management accounting. Welcome to Assurance Professional School. Our intervention for management accounting starts from today and ends tomorrow. I have shared a question, and I expect that every one of us. Who is this? Okay. So I expect that each and every one of us here at least should have access to the question before we begin something. Okay. In fact, so before we begin solving the questions or trying to appreciate what the question demands from us, let us just go have a brief overview or understanding of what we are required to do in relation to management accounting. In fact, management accounting is all about helping management to make informed decisions. So as we have financial accounting, which helps the business communicate whatever it has to outsiders. Communicate the question. Okay, so please can you forward the question here? Some of us don't have the question. Okay. I'll make the question available soon. So just an overview of what management accounting is all about. The syllabus requires us to have a first-hand understanding of virtually everything that is in the syllabus. So in order to increase your chances of passing the exams, you are supposed to have understanding of what you call the contemporary approaches to management accounting. So you are supposed to have an understanding of what you call the activity-based costing, throughput accounting, business process reengineering, just-in-time management, inventory management, talking about ethics, talking about total quality management. All of those things are the introductory aspect of the syllabus. And we are required to understand. Okay, somebody has shared it, Adam has shared it. So you can have the question is there, management accounting intervention questions, for those who don't have it. Okay, so that is the first aspect of the syllabus. After these contemporary approaches, we are supposed to understand and appreciate concept under budgeting, because as a management, we are supposed to prepare a budget. So you are supposed to understand or prepare, appreciate concepts about preparing what? A budget. So master budget, functional budget, flexible budget, all of those things. What are the importance of budgeting? What are the importance of budgeting? What is budgetary control? All of those things are supposed to be well understood by anybody who wants to pass and pass exams well. Now, aside that, we are also supposed to understand concepts concerning standard costing and variance analysis. So we are supposed to learn how to compute variances for material cost, labor cost, overhead cost, sales variances. We are supposed to determine the sales mix variance. And all of those things, we are supposed to appreciate all these concepts under standard costing and variance analysis. Aside that, we are also supposed to cover the area of break-even analysis, which is the cost volume profit analysis. So when we are considering that aspect, we are supposed to learn how to compute the break-even point, the margin of safety, if the break-even point, if you are targeting a particular profit. All of that must be covered by every student. Then also, aside that, we are supposed to go on and be able to make decisions for the business. So how do we make decisions? So we have short-term decision making and long-term decision making. So the short-term decision making has to do with, so when you are learning the short-term decision making, please pay attention to what we call relevant cost. So we are supposed to understand what we mean by relevant cost. Aside the relevant cost, we are also supposed to go ahead and be able to determine whether we are supposed to make a decision concerning making a product or buying the product. Should we shut down production or we should continue production? Those decisions are short term, like they are not for long term. Within, let's say, 6 months, 2 months, we are supposed to make such decisions. And hence we refer to such decisions as short-term decision-making techniques. Beyond that, we are supposed to also, as management, be able to make decisions that influence or that go deep into the future. Now, when we are talking about the long-term decision-making, then we are looking at investment appraisal techniques. And under investment appraisal techniques, we are supposed to know how to use the ARR, the accounting rate of return, to evaluate a project. We are also supposed to know how to use the discounted payback method, as well as the internal rate of return and the net present value. All of this. All right. All of these things have to be captured. Then we move on to performance evaluation. So divisional performance evaluation, return on investment, return on capital employed in terms of residual income, economic value added. Then you go ahead to learn about transfer pricing. What are the different methods of transfer pricing? Now, when you're able to touch on all of these things, one after the other, then you have greatly increased your chances of passing the exams well. But today, our focus is on the questions that we have. We want to solve some of these questions, try our hands, appreciate the concept deeper and deeper so that we can hopefully apply them when the exam day comes. When the exam day comes. All right. Okay. So we'll begin very shortly. All right. All right. Okay. Okay. I hope everybody can see my screen. My screen is showing. So this is the first question. We have up to 9 questions in all. Question 1, question 2, question 3, question 4, question 5, up to question 9. All of which we will try our best to finish today and tomorrow, whilst you also try your hands on other very, very important questions. So this is just helping us to equip us to be better for the exams. Okay. So let's look at question number 1. The question number 1 actually, if you look at the requirements, it said it's based on what? It's a question that is looking at break-even analysis. Break-even analysis. So we are supposed to calculate the break-even sales revenue, and then also requiring us to draw the profit volume chart. And then we also make some kind of explanation. Then the last aspect is explain how break-even analysis could be used in decision making. So we will solve this particular question. Let us pay attention. If you have a question, you can raise your hand. Please, this is just a caution to us. If you want to talk and it is not directed to us, please mute your mic before you talk. Okay, so we have question number 1. MKA has been in the clothing market for the last 3 years and operates in an industry which is very competitive and volatile. MKA's management accountant has heard that break-even analysis could be used to assess the risk of the business and helps decision making. The following information on MKA and its product portfolio is also available. Figures are per annum. So they are giving us figures for the whole year to assist us to answer the questions that follow. Question A up to D. So this is a problem they have. They are in a very volatile industry and a very competitive one, of course. And that the management account of the company has heard that break-even analysis will help them to assess their level of risk and also help them in making very, very important decisions. So we have how many products? I think 4 products. We have bags, belts, shoes, and jackets. Now, the production or the sales volume happens to be 1,000, 2,000, 1,500, and 3,500. They have also given us a selling price per unit. The variable cost they have said is excluding material cost per unit. Then we also have the material per unit, which is the leather. So the leather is what they use to produce. So they have given us variable cost, which does not include the leather cost per unit. Now, they went ahead to give us further information. So the leather is regularly used in the production of all the products above. So they rely greatly on what? Leather. If you read the additional, I'm reading additional information. The leather is regularly used in the production of all the products above. So all the products depend on what? Leather. The company has recently discovered that there's likely to be a shortage of leather on the market for the coming year. Meanwhile, they depend greatly on leather. So now they have discovered that it is possible in the future, in the very near future, market or demand or the leather on the market may be short. Leather used in production is bought from a supplier on a just-in-time basis for 60 Ghana cedis. Let's change this $ to Ghana cedis, 60 Ghana cedis per meter. So when you are buying the material, you buy it at 60 Ghana cedis per meter. So when you are going to buy the leather, you buy it at 60 Ghana cedis per meter. For now, enough material can be sourced from the supplier to satisfy the production requirements. And they have also given us the fixed cost per annum is 580,000 Ghana cedis. Now, the first requirement is that we should calculate the break-even sales revenue. Now, we have learned that when we are computing break-even, we are supposed to determine the contribution, and then we are supposed to also find out what the fixed cost is. Now, the fixed cost or the break-even point is equal to the fixed cost divided by what? The contribution. But this time around, they didn't just say we should find it in units, they said we should find it in value. So let us try and see how we go about this. All right. All right. Okay, I hope everyone can see my screen. So that's question 1E. Question 1E. So our break-even point, that is value, because they said we should find it in sales revenue, should be our fixed cost . divided by, because we wanted it in value, we can just go straight and find it, contribution to sales ratio, divided by contribution to sales ratio. Now, when you divide your fixed cost by contribution to sales ratio, you are going to get whatever answer you are going to get will directly be in value. But if you divide it by just contribution, then whatever answer you get is going to be in volume or in units, which after you are supposed to multiply it by the selling price in order to get the value. But if you want to go straight to get the value, what you do is that you divide the fixed cost by the contribution to sales ratio. So this is the formula we'll be using to ascertain or to solve for the first one, which is okay. So this is the formula, fixed cost divided by contribution to sales ratio. This formula directly gives us the break-even point in value. That's what the question demands from us. The question says we should determine the break-even point in sales revenue, which means that it must be in monetary terms. Don't forget that break-even point can be calculated two, one in units and the other one in value. But we should also be mindful that, we should be very mindful that this particular company, which is MKA, has so many products they sell. Please mute your mic. Right, Sophie. And then iPhone. Okay. Please be very mindful that the break-even point, if you look at this particular company, which is MKA, it has multiple products. It has about, I think, 4 different products it is selling: bags, belts, shoes, and jackets. Hence, if you are going to compute for the contribution to sales, it must be weighted average. It must be weighted average. The reason why it is weighted average is because the number of units or the number of product that is being sold are many. So you are supposed to weight it. If it were to be just one product, then we would have done contribution divided by sales ratio. Then we'll get our answer straightforward. So now we are supposed to head on and go and compute for our weighted average, because this thing cannot be found in the question, the weighted average contribution to sales ratio. We cannot find this thing in the question. Hence, we are supposed to do the computation ourselves. So let's look at it working. So the product, the unit or the number of sales that we intend to do, and then also the leather cost. The leather cost, the contribution per unit, as well as what? The total sales, and then also we can get our total contribution. Okay, so let me just give some space here. Let me give some space here. So total sales, then we have total contribution. So our product, the units, the leather cost, the contribution per unit, the total sales, and the total contribution. Please be reminded that the reason why we are going through this process is to ascertain our weighted average contribution to sales ratio. In fact, contribution to sales is simply contribution divided by sales, multiplied by 100. So if you want to get contribution to sales ratio, what you do is that you divide your contribution by sales and you get your contribution to sales. But the reason why we are going through this process is because we want to weight it, because the product is not one product. We have multiple products, and hence we are supposed to weight it. So the product we have bag or bags, we have belts, we have shoes, and what? Jacket. How many units do you intend to sell? We intend to sell 1,000 units for bags, 2,000 units for belt, 1,500 units for shoes, and then also 3,500 for jacket. Now, the leather cost, don't forget the leather cost was at how much? $60 per leather or per meter. The leather cost was what? 60 Ghana cedis per leather. That was what? The leather cost per meter. Now, when we are producing bag, how many meters do we need? Because it is very important. If we say we are producing bag and we are buying leather one meter for 60 Ghana cedis, then it means that the leather cost for producing a bag per unit is going to be 60 Ghana cedis. It's going to be how much? 60 Ghana cedis. Then when we come to belt, how many meters of leather are you going to use to produce one belt? How many meters? It is in the question. How many meters do we need? We need 0.25. If you look at the question, you realize the last part of the table indicates the number of meters for a leather we need to produce each of the products. So you realize that for belt, we need 0.25. For shoes, we need 0.5. And for jacket, we need 1.5. We need 1.5. Okay. So if that is the case, then we are going to multiply 0.25 by 60, which gives us 15. That is how much we will spend on producing belt. Then you multiply the number of meters we need for shoes, which is 0.5. You multiply it by 60, and we get 60 divided by 2 gives us 30. And then also jacket. Jacket, how many meters of jacket do you need? 1.5. If you need 1.5, then that gives us 90. So the leather cost per bag, we need 60 Ghana cedis. Per belt, we need 15 Ghana cedis. Then per shoes, 30. And then for jacket, 90. So what is the contribution per unit? What is the contribution per unit? The contribution per unit or contribution is equal to our selling price minus our variable cost. So if you look at the latter part of the question, you realize that the contribute or the selling price has been given us. If you look at you realize that the selling price per unit is how much? Bags is 400, belt 125, shoes 150, and jacket 300. And they have also given us variable cost portion, which is what? Excluding material cost. And now we have determined the material cost. So if you have now determined the material cost, then the total variable cost will be the one excluding material cost plus the material cost. Okay. Yeah, Jerome.
Yeah, sir.
Yes.
Yes, please. And I didn't get the leather cost where we get the 60, 50, and 30 and 90. I didn't get that place clear.
Okay. So you have to go back to the question. If you look at, let me just do the computation here, leather cost. So we have bags, belt. I hope you are following. And jacket.
Yes, please, sir.
Okay. So you look at it and you realize that
Oh, the one that than no. Oh, the exams officer.
So we
The
have,
exam-
if you look at the question, the
the
latter part
exams
of
officer.
oh, somebody's
Yeah, next week. The question.
okay. If you look at the latter part of the question, if you look at the table, go back to the question and you see the table. The last part of the table says material per unit, and that material is leather. And realize that for you to produce 1 unit of a bag, you need how many meters of leather? 1. For you to produce 1 belt, you need 0.2 meters for that. Then if you want to produce shoes, you need 0.5 of what? A leather to produce shoes. Then also the jacket, you need 1.5 in order to produce what? The jacket. Now, if you go back to the question, the under, which is the additional information, they have given us the price for 1 leather, which is 60 Ghana cedis. I said we should take the dollar off. 60 Ghana cedis per meter. So if I have leather, which is 60 Ghana cedis per meter, if I am producing 1 bag, to produce 1 bag, I'll spend how much? 60 Ghana cedis on leather. Then if I want to produce belt, it will be 0.25 multiplied by the 60 Ghana cedis. That will be the amount I'll spend on leather in order to produce belt. Then the shoes aspect too, I'll spend 0.5 multiplied by the amount for leather, which is 60 Ghana cedis. That will give me, I think, 30 Ghana cedis. Then the last aspect is 1.5. So I'll multiply 1.5 by 60. All right. So that's why I'm saying that. Go back to the question. So if you see the leather cost, it will be per leather is 60 Ghana cedi. And we need 1 leather or 1 meter to produce bag, which gives us 60 cedis. A belt, 60 cedis per leather. And we multiply it by 0.25 meters because we are saying that we need 0.25 to produce belt. And that gives us 15. Then shoes, 60 Ghana cedi multiplied by 0.5 meters. That gives us 30. Then 60 cedis multiplied by 1.5 meters because these are the number, this is the leather we need to produce each one. So in order to produce bag, we need 1 meter, belt 0.25, shoes 0.5. And they said the price for 1 meter is 60. So you multiply it and you get it. And this will give you 90. So that's how come I was able to get the leather cost, which is 60, 15, 30, and 90. Jerome, I hope you get it. Okay. All right, so let's move on. So we have the next tab we are supposed to fill is a contribution per unit. The contribution per unit. In fact, I've given us the formula here. Contribution per unit, or contribution is what? Selling price minus variable cost. So the selling price must be determined, and then the variable cost must be determined. Now, the selling price is direct in the question. I'll do for 2, and I expect you to do the rest for me quickly. So the contribution for bag. Bag and belt. We are determining contribution. What's the selling price for bag? The selling price for bag, I think, was 400 cedis. What is the variable cost? Now, the variable cost is in the question, and the variable cost is in 2. One is the leather, and the other one is excluding leather. So if you want to get a contribution, you are supposed to subtract all variable costs, not just a portion of the variable cost. So 400 minus the variable cost. Now, the variable cost we'll spend in terms of leather for bag is 60. Then the other variable cost is in the question. And that will be, I think, 150. So we have 150. So that will be 150. So what will be the contribution? The contribution will be 190. Then the next one is going to be the selling price. What is the selling price for belt?
125.
Okay, so 125 minus, so 15, the leather cost, plus what is the other variable cost?
50.
50. So this plus this gives us 65 minus 125 gives us, I think, 60. Or how much? Is that correct? Okay.
Yes.
Okay. So we have, the next one is shoes. What's the selling price for shoes?
150.
150. So we are supposed to subtract the variable cost from the selling price. And the variable cost should be 30, which is for leather, plus the other variable cost is how much?
65.
55. And that this will be 85 minus 150 gives us
55.
55.
65.
Is it 60?
Sir,
Is it 55 or 65?
no, it's 30 plus 65. The
Oh,
variable
okay.
cost.
Oh, okay. Okay. And it gives us 55.
Yes.
Okay. Then the last one happens to be jacket. And then the selling price for jacket is how much?
300.
300 minus our variable cost. What's our variable cost? It will be 90 plus the other variable cost is
125.
125. So you subtract the 2 from this, gives us how much?
85.
55. So now we can come here and put under our contribution per unit 190, 60, 55, and what? 85. What will be our total sales in value? Our total sales in value will be the number of units multiplied. The number of units we have, which is 1,000, multiplied by the selling price. The selling price for bag is 400. So 400 multiplied by 1,000 gives us 400,000. That is the total sales. Then you come to the unit, which is 2,000 units, multiplied by the selling price. And the selling price is 125. Hey. Okay, sorry for that. So we have 400,000. Then the next one is 2,000 multiplied by the selling price, which will give us, how much would that be? 300 and what?
250,000.
250,000. Then we have shoes. Shoes, the number of units for shoes is 1,500. Then you multiply it by the selling price. And that will be 200 and what?
25,000.
225,000. And then the last one will be 3,500 multiplied by 300 Ghana cedis. And that should give us
1,050,000.
1,050,000. So that's 1,050,000. Okay. So kindly add all of the total sales for me. And then let's move on to the total contribution. What will be the total contribution? We have the contribution per unit for each one of them. So the contribution per unit is 190 for bags, 60 for belt, shoes 55, and jacket 85. So you multiply this by the number of units and you get 190. And you get. Then the next one, you multiply 60 by 2,000, which gives us 120,000. Then you multiply, we are looking at the contribution aspect. So you multiply 55 by 1,500. If you multiply it, you are going to get 82,500. And then also the last bit, which is 3,500, multiplied by 90. The contribution per unit is 90. So you multiply this by this, and you get 297,500.
So which one are we multiplying?
So our, okay, I think somebody has a question. Okay. Total sales, okay. So what we are multiplying is that we are trying to determine the total contribution. And we have determined the contribution per unit. If you look at the contribution per unit column, you realize that bags is 190, belt is 60, shoes is 55, and jacket is what? 85. So we want to get a total contribution. The only thing you do is that multiply the contribution per unit by the number of units. And the number of units is 1,000 for bag. So you multiply 1,000 by 190. And you get a total contribution, which is 190,000, sorry. 190,000 Ghana cedis. So the next one, you multiply 60 by 2,000. Then the next one, you multiply 55 by 1,500. Then the next one, you multiply 85 by what? 3,500. And you get all that is at the last column, which is the total contribution. Okay. Now the total sales gives us 1,925,000. What will be the total contribution?
690,000.
690,000. Okay. So now we can now determine our weighted average contribution ratio. Now, the same formula for contribution to sales applies here. The only thing is that we want to weight all of them because the number of units or the number of products more than one. So if it were to be just one product, we have divided our sales by our contribution. We have divided just our sales, our contribution, which is 190, divided by what? Our sales, which is 400,000. But because we have more than one unit or product, we are supposed to weight it.
Recording in progress.
And get all of them and divide. So our weighted average contribution margin or weighted average contribution. Somebody with a question? Okay, so our weighted average contribution ratio is equal to contribution divided by sales. Either you multiply by 100 or you leave it as such. So our contribution, which we have gotten for all the 4 products, is 690,000. And the total sales we have gotten for all of them happens to be 1,925,000 multiplied by 100. So when you do this computation right, you may get, I don't know, what will you get? You are trying to determine 35.84%. So this is our contribution to sales ratio, 35.84. By virtue of getting this, we can now determine our break-even point in value. So our break-even point in value is going to be our fixed cost, which I've already said, divided by our weighted average contribution to sales. The fixed cost in the question was given to us as 580,000. If I am wrong, you let me know. Then the weighted average contribution to sales is going to be 0.3584. Whatever answer we get is a break-even point in value. What are we getting?
1,618,300.
1 million. Please come again.
1,618,303.57.
303.
3.57.
0.57. Okay. Yeah. So yes, you have access to the solution after this. Jerome, you are asking. So we have 1,618,303.57. So this happens to be the break-even point in value. So what it means is that what this answer means is that when you want to break even, when you don't want to make a loss or a profit at the same time, you are supposed to sell the units to get this amount of revenue. So when you sell and you are making this amount of revenue, then it means that you are not making profit and you are not also making a loss. You are not making a profit, you are not also making a loss. When you are able to sell and get this exact amount. But when you sell beyond and you get more than this amount, then you are entering into a zone of profit. But if you sell less than this, then it is giving you a hint that you are running into a loss. Now, the whole idea about break-even points is that it helps management to know the number of units they are supposed to sell in order to make what? Profit or loss, or to break even. So if you, as a management accountant, you have computed and you have realized that this is the break-even point in value. What you are supposed to do is that, how best will I be able to improve upon my system in order to produce more units and get more than this revenue at the end of the year? If I get, the moment I get more than this revenue at the end of the year, then what it means is that I'll be making some form of what? Profit. But this is the first aspect of the question, which is asking us to prepare or compute for the what? The break-even point in what? In value. So this is a break-even point in value. This is a break-even point in value. Now, the reason why I'm saying it again, the reason why we use the weighted average contribution to sales ratio is because the number of products in there are more than one. And hence, you are supposed to weight the contribution to sales. If it were to be just one product, we wouldn't have weighted it. But because there are more than one, you are supposed to weight the contribution to sales. Okay. Now, the B aspect of the question. The B aspect of the question is requiring us to draw something. The B aspect of the question is requiring us to do what? To draw. Now, the first thing we are supposed to do is to be able to what? For us to draw what they are requiring us, which is the profit volume what? Chart. We are supposed to, first of all, there are some steps we are supposed to follow. 2 steps, actually. First of all, before we draw the table, we are supposed to rank the products according to their contribution. What did I say? We are going to the first stage, or we are supposed to follow some process in order to draw the chart. So the first stage, stage 1, or step 1, is for us to rank the products according to their contribution. So we have already computed the contribution. So we have bag, belt, we have shoes, and then also jacket. What is the contribution? We have contribution for each of them. The contribution for bag, we have determined it to be 190. For shoes, for belt was, I think, 60. Then also 55, as well as what? 85. So the rank. Now, the contribution to sales for each one of them can be determined. So the contribution to sales, what will be the contribution to sales for each one of them? For bag, we are going to determine the contribution to sales for each of the products. For bag, for belt, for shoes, and for jacket. Now we have contribution. So let me bring sales here. Let me bring sales here. Or the selling price. Now the selling price for bag is 400. The selling price for belt is 125. For shoes, 150. And then also for jacket, 300. So now we are not going to compute or determine the weighted average contribution to sales. We are determining the weighted average per each of the products. So if you want to get the contribution to sales for each product, for bag, it will be 190 divided by 400. Okay, so Prince is asking, why are we using the contribution per unit figures instead of the total contribution for the ranking? Now, when you are using the total contribution, then you can't rank them. If you are using total contribution, then how do you rank? You are supposed to determine the individual contribution so that you know that one of them is ahead of the other or not. If I use the total contribution, then it's as if I'm doing it for all of them. This time around, I want to rank. My intention is to rank them. Which one should I pick? Belt ahead of bag, or shoes, or ahead of jacket? So what I'm interested in is that, what is the contribution to sales for bag? What will influence me to choose bag ahead of belt? It is their individual contributions. So if I use the total contribution, it will not help me to get their individual contributions. You get it? So I have to do it for each one of them separately. I'm supposed to do it for each one of them separately so that it will help me ascertain the ranking. Okay, so the contribution to sales for bag will be contribution divided by sales, which is 190 divided by 400. How much would that give us? This will give us 0.37. 0. What?
375.
375.
It's 47.
Okay, so it's 0.47. Okay.
Yes. The next one is 48.
Okay.
0.48.
So the first one is 0.475, 0.48, and the next one is
0.36 or 37. Can do 37.
Okay. So the next one is 7 or
367. Yeah.
okay. So and then the next one is 0. What?
In progress.
0.283.
283. So based on this, we can now rank. You see, now we can use the contribution to sales for each one of them to rank which one is ahead of the other. If we use the total contribution, we cannot rank it. How do you rank? Because it is for all of them. It will be very difficult for us to rank. That is why we are using the individual contributions. Okay. So which one comes first now? Looking at the contribution for each one of them, which one comes first?
Belts. 3.5.
So let me just put the rank here. So the rank belt comes first, 1 first, And then this person comes second, this person third, and this one counts what?
Fourth.
Okay. So now we now have our ranking. Now the second stage we go to, which is the second stage. We are supposed to determine the cumulative profit or loss, and then also the cumulative revenue. Because we are going to use the revenue against our profit. That's what the question said. The question said we should draw a chart with the profit volume what? Chart. So we need the cumulative revenue, and then also we need the cumulative profit in the order in which we have ranked them. The reason why we have ranked them is because we want to get the cumulative in this order. So first of all, we should have our sales, our cumulative revenue, then also our contribution, which we have already determined. We have determined this contribution already. And then our contribution, our cumulative profit or loss. Profit or loss. So this is the heading. So we have sales, which is bar. The first one we are selling is what? Based on the ranking, the first one is what? Belt. But before we even start selling, we have incurred a cost for fixed cost. We have incurred a cost for what? Fixed cost. So even before we start making profit, before we even start selling, we are already in negative. Even though we have not sold anything, none. Revenue, 0. Contribution, 0. We are already in negative because we have incurred. Even if you don't produce anything, the fixed cost there, you incur it, and that will be your loss for the year, which is 500 and what? 80,000 loss. Even though we have not produced anything. Don't forget, in the question there is what? A fixed cost of how much? 580,000. Whether you produce or you don't produce, you incur this, and that will be a loss to you.
Recording in.
Then the next one is we going according to the ranking. So the first one is belt. So far we have 0 here. What's our revenue? The revenue for the cumulative revenue will be how much? 200 and what? 50,000, because our sales was 120. The selling price was 125, multiplied by the number of units, which is 2,000. That gives us 250,000. Please don't forget. Then our contribution for that particular unit or product was 120,000. Then what will be our cumulative profit or loss? What will be our cumulative profit or loss? Now our revenue is how much? 250,000. It has gone on to reduce our what? Our fixed cost. So if you come, you realize that we have cumulative revenue 250. Our contribution for belt was what? 120. So in a way, it will reduce our cumulative profit or loss. How much will be our cumulative profit or loss? How much will be our cumulative profit or loss?
So please, how did you get the 120,000?
The 100 what?
How did you get the 120,000 under the contribution?
We have done this already. If you go back to our 120,000, where have you gotten contribution? This is the contribution. Look at this. Belt.
It's okay.
We have gotten this already. It's just figure.
Yes, please. Okay, thank you.
Welcome. Okay. So the contribution is this, and that is going to reduce our fixed cost. So contribution minus fixed cost. Our fixed cost is 580. So you realize that the contribution is now 120, and it will reduce our loss to 460.
60.
450.
Yeah. Then don't forget, we are going according to the rank. What bank? Sorry, bank. So now the bank, what is our revenue for bank? Revenue for bank was 400,000. So if you 400 plus what? 250 gives us 650. Don't forget, we are saying cumulative what? Revenue. What is the contribution for, what's the name? Bag. The contribution for bag was what? 190,000. And this one will also further reduce our cumulative profit or loss to 270,000. Then from bag, we can move to the third one. Shoes. Shoes. How many units or the revenue for shoes?
Doesn't matter when it comes to the tax issue.
Who is talking?
Is it if the beneficiary is
okay. So shoes. Shoes is the next one. What is the selling price for shoes? Or what will be the cumulative revenue? Somebody should help me. The cumulative revenue will be the revenue for shoes plus 650. How much would that be?
225,000.
225,000 plus what? 650.
Plus the cumulative contribution is 82,500.
Okay.
So
that's
875.
This is correct. Then what will be the contribution? Contribution happened to be what? 82,500. Then what will be our cumulative profit or loss?
187,500.
Okay. And we are still in loss. Okay. Then the last one is the jacket. And the jacket is, I think, 300 or 3,000 multiplied by 300. Okay. So somebody is asking if the cumulative revenue, how we got it. Okay, so the jacket is how much? What was the revenue for jacket? The revenue for jacket was 300, which is the revenue, the selling price per unit, 300 multiplied by the number of units. Multiplied by the number of, how many units do we intend to sell for jacket? We intend to sell 3,000 units, I think, or 3,000 multiplied by 300. And that will be 900,000. 900,000 plus what? 875,000. 900 plus 875. Okay. So let me check. What's the revenue? What's the selling price? The selling price.
It's 300 times 3,500.
Okay, okay. So it's 3,500. Okay. So 3,500 times 300. That is 105,000. Plus the 105,000 plus what? What we already have, which is 875,000. And that gives us.
Hello.
Yes.
It's 1,050,000.
1925. Yes.
The 3,500 times 300.
Yes, it gives us how much? 1,050,000.
50,000.
That's fine.
Yes.
But we are doing cumulative revenue. So we are supposed to add it to what we already have.
Yes, please.
So we add it to this and we get 1,925,000.
Okay.
Okay. So what is our contribution? What is our contribution for jacket?
975.
500. So we are going to reduce when we get a profit now. And I'm sure our profit will be 110,000. Okay. So if you have done this, then it means you are now ready to draw the chart. You are now ready to draw the chart. So we are going to draw the chart based on this cumulative revenue and then also the profit. And then also the profit, the cumulative profit. So you realize that we start from zero, or we start from negative profit, which is 580. Then we'll be reducing the loss gradually from 580,000 to 460 to 270 to 187,500. And then by the time we get to jacket, we'll cover for all our fixed costs and be able to make some kind of what? Profit. Okay. So we are supposed to draw the chart now. Okay. Forget my crooked line. Oh, let me just take this off. Because the loss is too much. So we are going to have our cumulative profit or loss here, which is on the y-axis. And then our cumulative revenue is on the x-axis. Cumulative revenue on the x-axis. So when we were producing zero, this is our zero. When we were producing nothing, we were making a loss. Our profit or loss, sorry, this is PL. Our loss, when we're producing nothing, we're making a loss of, don't forget that this side from the top here to the down is negative. Then from the top here to the top, from the zero upwards is positive. So this is our profit and loss what? Axis. And then we have the cumulative revenue also axis. So when revenue was zero, we were making a loss of, let's say, 580. That is the loss we were making. So if you look at the table we draw, or the stage 2, you realize that when we were producing zero, our cumulative profit or loss was 580,000. Then we moved on. Now we are producing, let's say, how many units? Our cumulative revenue is now 200, let me say 200 and what? 50. So now we have moved from zero, our cumulative revenue is now 250. So we move upward from 580, we are now, our profit or loss is now 460. So let's assume I'm plotting here. So this place will be like 480, and this is what? 460, sorry. And this is 250. So I'll plot here. Then we move on to the next one. When my cumulative revenue has moved to 650, my profit has also moved, or still in negative. It has now moved from 460 to, or let me say my loss has reduced from 460 to 200 and what? 70. So let me say this is 270. So I'm tracing it up to this point. So this is my cumulative revenue. This is my loss, because below this 0 point, all of this here is in loss, is in negative. Then upward is in what? Profit. Then from 650,000, I can now move to 800 and what? 75. So let me say 875. At this stage, I am making a loss of, let me see, 187.5. I'm making a loss of 187.5. So I can plot around this point. Then after that 875, I've moved from my cumulative becomes what? 1.9 something million. And then my profit will now move and get to how much? 110. So you realize that it has crossed the zero. It is now in profit. And it's going to be, let me see, 1.9 something, 1.925 million. So I'll plot here. So you realize that it has moved from zero when we were producing nothing. We were here, we were in negative, a loss of 580. Then we moved to 460. Then we moved to 270. Then we moved to a loss of 185. And now we are now at a profit of what? 110,000 Ghana cedis. So this is what you are supposed to do. Before you be able to draw this graph, you should go through this process by ranking. You should go through this process. The first stage, rank. Then the second stage, you are supposed to get the cumulative what? Revenue as well as the cumulative profit or loss. Then you come and draw this. Now, the reason why it is like this is because we have gone very deep, which is in loss, before we were able to come out on top. If we were to start with a profit, then the graph would have started above zero, not below zero. The reason why it's below zero is because we started from negative. So when we are producing nothing, we're in a loss of 580. Why we got the 580 or how we got it is because our loss, or we're already having a fixed cost. Whether we produce or we don't produce, we will incur that fixed cost. Hence, we'll start from a negative perspective before we gradually move from the negative to a positive, which happens to be on jacket. And that moves us from our negative 580 to a positive of 110,000 Ghana cedis. Okay.
Hello, sir.
Yes.
So in examination hall,
okay,
are they going to provide us with graph sheets, or we have to do a raw sketch?
Of course. In fact, when they want you to be very what's the name? On point in terms of the graphing. What I've just did here is I just took the cumulative figures and use it to draw the graph. When you are given a graph sheet, then they expect that you are supposed to choose a very good scale based on the figures you have. So if it is 2:2 or 2:4 or something, depending on the figures you have, you can choose a very good scale in order to plot and plot well. But in this case, I don't have a graph, and that's why I just use the raw values to demonstrate how the graph is drawn. So when you are given a graph sheet in the exam room, then it means that they want you to be very specific. Don't just use your free hand or assume the figures for them. Okay. Then I think that's not all. The question has how many parts? I think 3 parts. We're able to get the first part and then the second part by drawing the graph. Then the last part says that, what did he even say? The last part, what did they say? Okay, they said, explain how break-even analysis could be used in decision making and outline the limitations of the technique. So how do we use break-even analysis in making decisions? And what are some of the...
It's rather the C. We are yet to go to the D.
Okay, so how many questions do we have in all? A, B, okay.
We have 4.
Okay, so we have drawn the graph. Okay. So see explain how the unavailability of leather and the rise in its price affect the profitability and break-even point of MKA. Somebody should help us with this one before I add my voice to it. Any idea? Don't forget that the question said we depend heavily on leather. If you read the question, you realize the company has recently discovered that there's likelihood to be a shortage of leather on the market for the coming year. So The question is, explain how the unavailability of leather and the rise in its price affect the profitability and break-even point of MK. Now, this one, the moment prices increase or the prices of leather increase, definitely is going to affect the contribution of MKA. Whatever contribution MKA will be having will reduce automatically. The reason why it is like that is because MKA depends heavily on what? Leather. If MKA depends heavily on leather, leather is what? It's a variable cost of production. And for you to get your contribution, you must subtract your variable cost from what? Your selling price. Now we are assuming that this selling price remains the same. And the variable cost, which leather is part of, has increased. If it has increased, then automatically it will reduce our contribution. Let us assume that our selling price is 400 and our variable cost used to be 200. Hence, our contribution is 200. Now, we are saying that the variable cost has shot up to, let's say, 250 minus 400. And our selling price remained the same. So when you subtract 250 from 400, it will reduce our profits or our contribution to what? 150. Now, the more there's a reduction in your contribution, then the likelihood it is for you to run at a loss. Because the higher your contribution, the higher the probability or the chances of you being able to cover for your fixed cost. Now, if you're able to cover, if your contribution is able to cover more than your fixed cost, then you'll be able to earn some profit. So the whole idea about question 2 is for you to explain that. Sorry, the C aspect is for you to explain that MKA depends heavily on leather. Now, since MKA depends heavily on leather, if there's an increase in the price of leather, it will tend to reduce the contribution of what? MKA. And by virtue of that, okay, by virtue of that, you'll be able to, the moment your contribution reduces and your price remains the same, then you'll be running at a loss, or there's a danger of you running at a loss. So you go ahead and explain further by telling the examiner that now, because of the increase in the price of leather, it also means that MKA must work harder, or MKA must produce more in order to what? Break even. In order to what? Break even. I'll demonstrate that. I want you to be able to understand it and be able to write in case you are being asked. Okay. So let's assume that the fixed cost is 500,000. Let's assume the fixed cost is 500,000. Our initial contribution is 200. And now our contribution has now reduced to how much? 150. So let's look at the break-even point when it was 200. How many units are you supposed to produce? 500 divided by 2. Oh no. So 500 divided by 200. That will be 2,500. That's the number of units you are supposed to produce in order to break even when the contribution is what? 200. Now, when the price of the leather, we are assuming that the variable cost is the price of the leather. Initially, it was 200. Initially, it was, let's say, 150. Now it has moved to 200. So let's say when it was 150, how many units are you supposed to produce? So that is the 500 divided by 1,000 or 150. So your fixed cost is going to be 500, 1, 2, 3 divided by 150. That would be 3,333. So it is our duty to be able to explain this to the examiner. In fact, this part of the question they are not asking us to do any computation. I'm only doing these computations. Keep in mind, some of you may think that what I'm doing is part of the answers. No, I'm just doing these things for us to understand the explanation you give to that particular question. It is not a computation question. It is for you to explain to the examiner. The examiner is asking if there has been an increase in the leather or there's a shortage of leather. How is it going to affect what? The production? Or how is it going to affect the company? Now, I'm saying that the moment the price of the product has increased, then of course, the contribution is going to what? Reduce. If the contribution reduces, then it requires that you work harder. You work hard in order to achieve your target. So you realize that when the price was 200, I'm just demonstrating, when the price of the leather was 200, the contribution was 200, and you are supposed to produce 2,500 in order to break even. Now the selling price has now moved from 200 to 250, and it has reduced our contribution to 150. So look at this. Now our contribution is 150. We need more units in order to what? To break even. We need more units in order to do what? To break even. So when you are explaining, please explain that the moment there's an increase in leather, the price of leather, it will reduce contribution. You realize that it has reduced contribution from 200 to 150. And then also the other effect it will have on the company is that they would need to produce more units in order to break even. So you realize that the break-even point at the price of 200, which when the variable cost was 200, it was 2,500. But now the price has increased, the variable cost has increased to 250. Then you have to produce more units in order to break even. So you are supposed to work extra hard in order to get some form of profit. So this is what you are supposed to explain when it comes to the C part of the question. The C part of the question. Okay, so if the question asks you to compute the break-even point in units, that is what I've just done here. The figures I've gotten here, the assumptions I've done here is just in units. If they say you should calculate in units, you only divide your fixed cost by your contribution. You don't multiply it by the selling price. So fixed cost divided by contribution gives you break-even point in units. Break-even point in units. So if you are doing fixed cost divided by contribution, but if you are doing contribution, or in this case, because it is weighted average, it will be weighted average contribution, not in value, but in terms of units. So the contribution to sales ratio, what we used this time around, was for us to be able to ascertain the break-even point in value. But when you are doing only for units, you don't multiply it with what? The selling price. You only do fixed cost divided by contribution. Fixed cost divided by contribution should give you break-even point in units. Break-even point in units should give us fixed cost divided by what? Contribution, without multiplying it by our selling price. Okay. So let's move on. We are done with C, and then we are supposed to move towards D. We are done with C, and we are moving on to D. Now, the D part of the question asks us to look at the benefits of the break-even point in terms of decision making, and then also some of what? The limitations. Yes, please help me with some of the benefits. What are some of the benefits you derive from break-even analysis? Oh, what are some of the benefits we get from break-even analysis? Yeah, Julius.
Okay. It helps management to determine the number of units it has to
It helps
operational
management.
cost.
Okay, help management
Yes.
to do what?
To determine the quantity they have to sell to cover up with their operational costs.
Okay. So a health management, or that is actually their major, what's it, the major advantage or benefit you get from what? From break-even point. It helps you to decide. It helps in making forecasts. Somebody have said that. So we are saying that the major benefit using it helps management in making decisions about. So it helps management in making decisions about the lowest amount of activity, the lowest amount of activity So if you are also looking at the target profit, okay, so somebody is saying that it is not difficult to understand, it is simple to understand. And then also, okay, so let's look at some of the limitations. To understand by okay, so let's look at the limitations quickly. Limitations. What are some of the limitations? Now there are some assumptions. Yes, the assumptions are unrealistic. That's very true. So assumptions like all costs can be divided into fixed and variable cost. This assumption is not always true. The total fixed cost. The total fixed cost remains constant irrespective of the level of output, and then also that the total variable costs are directly proportional to volume. over the relevant range. So these are some of the limitations, these assumptions. Okay, Bless. Is your hand up or is the old one?
Hello, sir. No, I just wanted to make a comment in relation to the limitations.
Okay.
I think yes, would I say it might result in complacency of the firm's operations?
Why would you say that?
Okay, in a way that per the management operations in some organizations, once management are able to cover all their costs in their operations, they tend to be reluctant as per their capacity that they still have, that they could have even worked more to gain profits.
Okay. Okay.
Yeah.
So the idea about the break-even point is to give management the indication of the minimum they can do. Let's get that clear. The whole idea about break-even point is to give management an idea about the minimum they can do. So definitely everybody or any management, any business, particularly especially for private companies, their intention is to make profit. So by using the break-even point, it gives you an idea about the minimum production you can undertake, below which you will be running at a loss. So as to whether they'll rest on their laurels when they get their minimum or they get a break-even point, I don't agree. It may be though, but I wouldn't say they'll rest on their laurels, because any serious management, by indication of the break-even point, you get that, okay, I'm supposed to produce 2,500, not to make profit, not to make loss. That is the minimum I should produce to cover my cost. And then you tell me that by virtue of that, you rest on your laurels and oh, I'm okay. Okay, then of course, then you are not serious in business. You don't want to compete well. It may be that, yes, some of them, but any serious businessman, after determining your break-even point, should be finding ways and means of improving to get more units in order to beat what? Competition. Any business who would want to reduce or relax or rest on their laurels after getting the break-even point is not ambitious enough. That is my take, actually. Julius.
Yeah, okay, so thank you.
You're welcome. Okay, so let's move on. I think we are done with question number 1. We're able to solve A, B.
Yes, sir.
Are we done? I think so.
Hello,
We are
sir.
done. Yes.
Sorry to draw you a little back. Can you please go back to the page that we just bypassed? I just
Okay.
want to take something.
Okay.
Okay, thank you, sir. I'm fine.
Yeah, okay. So let's move on. I think we are moving to another question, which is question number 2. So we're able to solve the break-even point. We do the chart and then look at some of the theory aspects. This is how the questions are going to be in the exams. The management accounting question, this is how it's going to be. That the first part, probably they'll ask you theory, and then the next aspect or the follow-up questions will be like calculations. Or it will be calculations, then the follow-up questions will be theory. Just like what we have just seen. So don't be surprised when you go to the exam room, a question is 2 in 1. Part of it, like 50% of the question is practical, then another 50% of it is theory, just like what you have seen right now. So don't be surprised at all.
Hello.
Okay.
Hello, sir.
Yes.
Hello, sir.
Yes.
I've seen that the questions are very interesting, and if you're able to go through them, we stand a good chance of passing the paper.
Okay.
But I want to ask, in selecting the questions, were you also guided by the fact that probably these are some questions that have not been examined for a long time, areas within the syllabus? which are likely to come.
Yes. In fact,
Okay.
so the areas, general, I think the questions I have here cover like about maybe 80 to 90% of the syllabus. There are questions in there that are on budgeting, transfer pricing. You can see life cycle costing question in the standard variance analysis. All of the questions are in there. So if you're able to go through all of this, the only thing is that you cannot predict the people with certainty that because maybe last sitting questions were on, let me just say you saw questions or maybe activity-based costing or throughput or something. Maybe last sitting there were questions on it. And then you assume that because last sitting there were no questions, then this sitting there will be questions on that particular topic again. Let us don't make that mistake. Even though the last sitting, the question may come, this sitting they may ask you the same question. If you look at what's the name, corporate reporting, those writing corporate reporting for some time now, there have been a particular topic that has been keep repeating, and that is
wow.
Yes, they keep repeating it like for about 4 sittings in a row. That is the only question, or that is the topic they ask their questions on. They are supposed to add either business reconstruction or business valuation. These are the two things. So question 4 is about business reconstruction or valuation. And they keep asking valuation, like 3 in a row. So if you're a student now, would you say that because 3 in a row, valuation has been coming, then now they'll ask reconstruction? You make that mistake and they'll repeat valuation again. So I wouldn't say that we should just use, even for guidance, let us not be so reliant on that. Let us just prepare and be ready to face anything. Okay.
Okay, sir. Thank you, sir.
Oh, welcome. You're welcome. Okay. Okay, so somebody was asking about capital budgeting. No, I don't have capital budgeting in this question, but I'll be sharing a question that's investment appraisal. Yes, I'll be sharing a question. I'm not sure we'll have time to go through it, but I'll be sharing a question on investment appraisal, which you can take your time and go through. In case you are finding challenge with it, you can just send me a hi to assist you. By the questions I'll share, there's no investment appraisal in there. Okay. I think yeah, is it Timmy? Okay. Let's move to question number 2. Question number two, I think is on, what's that? Okay, so this is environmental management accounting. For some time now, environmental management accounting, students usually don't pay much attention to it. They pay lip service to it. And so I decided to bring a question on environmental management accounting. So they said the question is about a pharmaceutical company. You say NS Chemist is a pharmaceutical company trying to decide whether to continue with the production of one of its drugs. You see, so they are trying to consider whether they should shut down the production of the drug or to continue the production. So they are saying on economic grounds, so financial, so we are talking about financial aspect, the decision to continue manufacture is marginal. However, in the light of recent high-profile corporate scandals linked to environmental disasters, NS Chemist is particularly anxious to make an informed decision based mainly on the environmental effects of continued production. Following up on a review of its operations and various reports from its operations of director, NS Chemist management accountant has identified the company's main environmental costs as follows. So these are the costs that they incur environmentally. That we are solving question 2. We are trying to understand environmentally what are some of the costs as a business, what are some of the costs you incur. So in relation to NS Chemist incurs what? Waste disposal cost, water consumption, energy consumption, and transport and travel what cost. And they said we should explain how the costs listed above arise and what control measures could be implemented by Ernest Chemist in order to manage them. Then we are also supposed to describe briefly 4 management accounting techniques for the identification and allocation of environmental costs. So this is a question about environmental accounting, environmental management accounting, I should say. So the question says we should first of all explain how the costs listed above. What is environmental management accounting in the first place? In fact, there are some costs that we incur that does not necessarily inure to our benefit as a business. But we are supposed to, as a business, as a matter of fact, we are supposed to cater for the environment. So in terms of waste disposal, it's a cost. How do you manage your waste? How do you dispose your waste? Do you dispose your waste in a manner that will affect what? The environment? Now, if that happens, then the community may even hoot at you. The community may not be in agreement with your operations, and when they come at you, your business may collapse. So that's one cost that Ernest Chemist incurs. The other one is water consumption. The next one is energy consumption. And then the next one is transport and travel. Now read the question very well. A says that we should explain how the costs listed above arise and what control measures could be implemented by Ernest Chemist. Okay. I think we are all on the same page. So that's question 2. Question 2A. So we have waste management or waste disposal. Waste disposal cost. The question is in 2 folds. How does the cost arise? Now, when you are disposing, so the cost. How does it arise? It could be as a result of maybe fines due to non-compliance or non-compliance with laws and regulations. So I'm explaining what we mean by this. So we are talking about waste disposal cost. Now, when you don't manage your waste properly, you are likely to pollute the environment. Now, when you pollute the environment, now Environmental Protection Agency will come at you because of your inability to protect the environment properly, your inability to go in accordance or follow the laws and regulations of the country. They will come at you and they will fine you. And that is one way you incur the cost of waste disposal. Waste disposal. Maybe you are not managing your waste properly and you incur what? Fines. And you pay for it. Another one is also raw materials. Wastage. So the raw material wastage is in such a way that, okay, you are producing, let's use the leather example. We were using leather to produce our bag, shoes, and all of those things. Now, when we bought the bag, the bag and the leather and all of those things, we were using them to produce shoes, jackets, and coat. In the cost of producing, we may not be able to use the leather efficiently, and some of them will go waste. By virtue of them going waste, it is a cost to us. If we were to be able to prepare it, then we will minimize that cost, or we will not even incur the cost in the first place. We will not even incur the cost in the first place. Okay. So waste disposal cost. You can incur costs when you are being fined. And then you can also incur costs when you don't manage your raw materials properly. And the other one is talking about how do you control it, control measures. How do you make sure that this, what's the name? Fines do not act, okay? How do you make sure that your raw materials do not go waste? How do you make sure that you are able to use your raw materials efficiently and effectively? So in order to avoid raw material wastage, in order to avoid fines due to what? Non-compliance with laws and regulations, what do? You're supposed to put in some form of measures that will prevent or reduce this particular cost. And there's something we call the mass balance approach. A mass balance approach. Now, when you adopt the mass balance approach, then you are trying to solve the problem for raw material wastage. Now, the mass balance approach is more or less talking about whatever you bring in as a business in terms of your raw materials, and then whatever you bring out in terms of the raw materials, you weigh it. You try and find a balance. Okay, so the raw materials I brought in, that was 5 kg. Now I'm producing the bag. What is the weight of the bag, or what is the mass of the bag? The two of them will tell you how much you have lost in the production process. Is it normal loss or abnormal loss? If you are able to adopt this strategy, you'll be able to minimize or reduce your raw material wastage. The other thing you can also do to reduce your waste disposal cost is to make sure that you do not emit gases, emit liquid items into the environment that will pollute the environment. If you do that, you have to put in measures in place, such as maybe having somebody who caters or makes sure that production is always within the laws and regulations of the country. Or maybe you can just employ a compliance officer. So you can get what? A compliance officer. By getting a compliance officer, you make sure that your wastage is properly managed in accordance with laws and regulations. If you bring in these two, or you are able to adopt these measures, you reduce this cost of waste disposal, like such as fines and raw materials. Then the other bit is that it's talking about water consumption cost. That is B. Water consumption cost. Now, water consumption cost is in twofold. Now, you use water to produce, so cost. So you use water, you incur water consumption cost in two ways. First of all, you buy water. You buy water. And then also the other aspect is that you dispose it off. So these are the costs you incur. So you are, first of all, before you undertake, the question is in relation to a pharmaceutical company. The question is saying that a pharmaceutical company, so and so and so. So in order to produce the drugs, they buy water. Well, they need water to process it. At the end, the water, all of them may not be used in producing. And some of them may be disposed of, some of them may be dirty. And that one, disposing it off also comes at a cost. So by buying, you buy with money. Disposing it of also comes at what? A cost. And all of these things would cater for what? Or would contribute to your environmental cost. We've looked at waste disposal, and then we are looking at what? Water consumption cost. So when you are consuming water, which is also environmental, you incur it in two ways, either by buying or by what? Disposing. And what are you supposed to do in terms of control? What are you supposed to do in terms of control? In order for you to reduce your water bill, because this is about billing, disposing and buying, what are you supposed to do? You are supposed to determine where what water is used. Where do you use water? In fact, the water you are buying, identify. So if it is the production department that does what? The buying of the water, or that uses water more frequently, you should go into the manufacturing or the production department, analyze the way they use water, and find ways in order to minimize their water consumption. That is one way, or that is the way you'll be able to reduce your environmental management cost, which is water consumption cost. So we look at waste disposal cost. These are some of the costs you incur. When you are incurring water consumption cost, you incur the cost on buying the water, and then you also incur cost of what? Disposal. Then what are some of the control measures? It is your duty as a management accountant to analyze your company and find out where exactly water consumption is on a high in the company. Then you ask yourself, how best would I be able to manage this water consumption in this department? If you are able to manage it properly, it will reduce your cost, the cost you incur in terms of water consumption. And by the way, the disposal of the water will also be minimized, because if the buying has reduced, the disposal will equally reduce, and that will minimize your cost of consumption in terms of what? Water. These are costs. The question is asking us that these are costs that NS Chemistry incurs in terms of environmental cost. One is disposal cost, the other one is water consumption, and they are asking us, what are those costs that will fall under, or what are the things that will fall under disposable costs that NS Chemistry will incur? What are the things that NS Chemistry will be able to put in place in order to minimize this cost? Then we say, okay, water consumption cost, water buy, dispose. What are the control measures you put in place in order to minimize it? Okay, then we can move on to the third one, which is after water consumption. The next one is what? I think energy consumption. So we are talking about electricity. Energy consumption. So like any other business, so in fact, when you are operating as a business, you cannot do without light. So you ask yourself, how am I going to reduce my light cost, or ECG? If you are in Ghana, if you happen to be in Ghana, definitely you'll be incurring some costs. You fall in trouble with what? Electricity Company of Ghana. So the cost you'll be incurring is in the form of what? ECG. Is what? Cost of what? Cost of electricity. So usually the energy cost, or maybe solar panel So all of this, either it is what's the name, electricity or solar panel you use, there's some form of energy that you use to power your production. There's some form of energy. Where do you get that energy from? Either you do normal electricity, or maybe you go for solar, or maybe generator. Maybe generator. So either you incur the cost in terms of electricity, generator, or maybe solar panel. So energy consumption, this is where you are going to incur cost. Then what are some of the things you can do to reduce this what? Cost? Control measures. So we have control measures. What do you do? In fact, if you are using electricity, you make sure that if it is a house, let me use a household as an example. If you are consuming too much light or light bill is becoming too much for you, what do you do? When you are leaving home, you make sure that you switch off what? Your sockets, if fan is on, or fridge, and all of those things, in order to what? Save some energy. In order to save what? Energy. So those wasteful practices, wasteful energy practices, should be what? Minimized. So if it is generator, you make sure that when the light comes on, electricity comes on, what do? You off it, because the generator is being powered by what? Fuel. If it is being powered by fuel, and then what's the name? The lights come back, the normal lights come on. You still have to keep the generator working. You are supposed to preserve some form of fuel so that you minimize what? Your cost, or you reduce your cost, the cost you incur on what? Energy. So the cost is there, electricity, solar panel. What are those control measures? There's a lot of what? Practices that we undertake, or things we do that makes it consume more. If you are ironing, if it is factory, what's the name? Factory plant that you are using to produce, when you are done producing, the plant must not be on, or the switch to the plant must not be on. It must, you must off it. Now those little things contribute to your cost of consumption in terms of energy consumption. Now, when you reduce all of these things, sometimes nobody is in an office, and then the AC is on. The AC will work, nobody is there. Or some people even open the office down, and then also they open the office down, and then the AC will be working. So there's heat and then AC all together. All those things what? Increase your cost of consumption in terms of energy. So those are the petty things. If you want to minimize cost, those are the petty things you are supposed to do in order to minimize cost in terms of energy. So we look at what? Waste disposal cost of control measures you can put in place. And then we also look at water. And then we have just looked at what? Energy. And the last one is talking about transport and what? Travels. Transport and travel. So there are costs that we incur in transport and travel. Sometimes you incur costs like fuel. Because if you have a car, a company car that you are using every day, you incur fuel. Definitely, if you are using a car, you don't expect that the car will be working without what? Fuel in it. And then also, if you want to perhaps control this thing, then maybe you are supposed to buy different types of cars. Know that there are a lot of cars with different types of engines carrying them. The higher the engine size, the higher the fuel consumption. So if you are a business and you want to minimize your transport and travel costs in terms of environmental, be aware that these things, repairs and maintenance is okay. So yes, you incur repairs and maintenance costs. Julius says repairs and maintenance. So these are some of the costs. Yeah, Adam, your hand is up. You want,
Yeah, how's that?
want to add something?
No, I want to ask a question.
Okay.
I want to know, do we relate it to how it affects the environment afterwards?
Okay, so in this part, are you done?
So
or-
we incur the cost and then we relate it to how it affects the environment. Maybe the emissions that come out from the car, etc. I don't know if I want to get an understanding the relationship between the cost and then the effects it's having on the environment.
Okay.
Yes.
Okay, so already the way the question has been asked, it presupposes that these activities in terms of energy, transport and travel, water wastage, and all of those things already have an effect on the environment. That is why this has been classified under environmental management accounting. So the understanding already is that the thing affects what? The environment, and you as a business incurs cost in managing it already.
Okay.
You get it? So now,
Okay.
if you are already incurring the cost, what are you supposed to do as a business in order to minimize that cost you are incurring?
Oh, okay. Okay.
You get it?
Yeah.
So now that
Fair
is what
enough.
they are trying us to, they are asking us to do, to identify some of these costs that fall under these umbrellas, and what are the ways a business can adopt in order to minimize or reduce this cost. Okay.
Okay. Okay.
So if we are incurring transport like fuel, repairs and maintenance costs and all of those things, then what are some of the ways we can reduce this cost? Control measures. What can we do to reduce transport and travel costs? Maybe we can buy is this more, let me say the engines, okay, let me say we should buy more efficient. Let me say we should buy more efficient, or let me say fuel efficient. Okay, let me just cancel fuel efficient cars. And then also, maybe we can also be very particular about the type of car we buy in terms of the repairs and maintenance. And then is your hand still up? Okay. So repairs and maintenance, how do we control repairs and maintenance? Okay, so somebody says stop unnecessary moving of the vehicles. Okay, that could also be stop unnecessary moving. And then somebody is also saying something. Proper measures should be taken to reduce repairs and maintenance. And what are those measures? Rosie, what are those measures? That's what we want to know. How do we reduce repairs and maintenance costs? Okay, so maybe we can have transport managers. Okay. To assess major breakdowns. Okay, so somebody said for go unnecessary errands of the vehicles, having transport managers, and then also proper measures should be taken to reduce. Okay, so actually want the proper measures. And then also stop unnecessary moving of the vehicles. Frequently checks on water and oil levels. Yeah, so those are some of the things you can do in order to control your cost. So maybe you can have a mechanic who checks the vehicle more frequently for you so that you don't have major breakdown in the future. So you have a transport manager who is in charge of the vehicles to manage it properly. Or maybe you buy fuel efficient cars. Some cars are more fuel efficient than others. Some cars consume a lot of fuel. So these are some of the things you can do to reduce, or these are some of the costs we have identified, and some of the ways you can reduce those costs as a business. So these are some of the things. They are just teaching us as a business, a management accountant. If you're a management accountant, what are some of the ways you can minimize costs? These are cost reducing what? Techniques. In order to make profit, in order to advance or progress your business onto the next level. One of the most critical things for a business to do is to be able to minimize its cost of production. So how do you minimize cost of production? These are some of the things, small. If you're able to reduce them, then there's a little drops of water makes what? A mighty ocean. Okay. So let's move on. I think we are done with the A part. Then the second part says we should do what? I don't know how many parts the question has. The question has 2 or 3. So let's look at the final part.
2.
2, okay. So let's look at B. The B says we should what? Let me just check the question.
Briefly describe
for management, okay, accounting techniques for the identification and allocation of environmental costs. Okay, so you are supposed to identify 4 accounting techniques. What are some of those techniques that we use as a management accountant in order to identify this what? Cost and also allocate them. So they are cost, or these are some of the, let me just help us with the techniques. Okay, so activity-based costing. Yes, we can use activity-based costing. Somebody said that. So we can have activity-based costing. It's one of the techniques. In fact, we can use another method or technique known as the life cycle costing.
Is it the same as life cycle assessment?
Okay, so the assessment leads to the costing. So if you are assessing, it's like you want to know the cost. So it is out of the assessment that you can determine the cost. But if you like, you can use it interchangeably. But for me, if I say assessment, what I'm trying to do is I'm trying to evaluate it. After assessing, then I can attach some values to it.
Okay. Thank you.
Welcome. Then also we have another one. So we can use these techniques. I think activity-based costing is not something that is new to us. We have heard of it before, ABC, whereby there are some these things. We have a cost pool, a cost driver. So if you look at activity-based costing, we are looking at something we call cost driver. What is actually bringing about, or what activity is actually bringing about this particular cost? You see, so environmental management accounting, you realize that, okay, but if you are using activity-based costing, we can know exactly the activity that is generating or bringing about this cost. And then also life cycle cost, we are talking about the lifetime of a particular product or something. So when you are looking at it within the context of management accounting, see that the life cycle is a technique which requires the full environmental consequences. So you are analyzing the environmental consequences of your activities. then you cost it. So from now to maybe in the next 5-10 years, maybe that is what you envisage that this production you are doing will take place. Maybe another one will take over in the next 10 years. So from now to the next 10 years, what will be the environmental effect? What will be the cost you incur in the environment or on the environment? If you do that and you're able to split it, then you say you are doing the life cycle costing. But the activity base is talking about the activity, which activity, it's not every activity that brings about a particular cost. So you are interested in the activity and what is driving that particular cost. So that is 2. Then also we have 3. The third one is what we call the input outflow analysis. So we can also use this one to be able to manage or analyze our environmental costs properly, or environmental management accounting. So if you are looking at the input outflow analysis, we are just trying to use this technique to record all the material inflows. So all the materials that come into the business, and then also the ones that leave the business. So when you are using leather to produce, you are keeping records of the leather that comes in. Now use the leather to produce, and then at the end of the day, you sell the leather. You sell the bag and the shoes, those things that use the leather to produce. What is the remaining? What is the remainder? The remainder will be like maybe you bought in 100 and you sold 80. Now at the end, it is left with 20. Now that 20, which is maybe 20 kilograms that is left, then you'll be able to what? Maybe it is as a result of scrap or something, part of it will go waste. Maybe 10% will go waste. And then the other 10% will be there for you to use. When you are able to do or analyze your inputs in terms of materials against your outputs and know where the scrap or the wastage has gone into, or where there's a leakage, or where you have incurred some kind of cost in it, then we say that that is the input outflow analysis. So the assumption is that when you are producing something, there's a probability that if you buy in 100 kilograms of leather to produce a bag, you don't expect that at the end of the production, you still get 100 kilograms of the bag. Maybe as a result of production, some of them may go waste. So the one that has gone waste, you are trying to analyze it. And say, okay, that is the cost you have incurred. Because if you have bought a thing 100 cedis and the one that came out was 80 cedis, then since you are trying to make some kind of what, a loss there. So by analyzing your input outflow, then you can determine your cost. You can determine the environmental cost. So by doing this, you can also determine the environmental cost. So we have looked at activity-based costing, we have looked at life cycle costing, and then also the input outflow analysis. Then there's also another one called the flow cost accounting. It's not so different from the input outflow analysis. We call it the flow cost. It's called a flow cost accounting. Now, it is also a technique talking about materials, but it also just don't talk about material. It also includes the organization structure. So we are not just looking at the materials that come in and the ones that go out and the net effect, what is remaining, what has gone for scrap and all of those things. When you look at it from that level, then it becomes only input outflow analysis. But when you consider the organization structure into it, as well as the materials, then we are looking at the flow cost accounting. So it talks about the material flows by looking at the physical quantities involved, those physical quantities that come in, their cost and their values. Then also it divides all of these things into 3. The categories are 3: the material, the system, and the delivery, as well as for disposal. When you look at all these 3 categories, then, or you consider all these categories, then the accounting you are using is known as the flow cost accounting. But when you look at only the material aspect, which talks about how many units come in, how many units come out, then you say the input outflow analysis. When you are looking at the life, okay, sorry, I went off a bit. I think you can hear me now.
Yes, please.
Okay. So those are the 4 techniques we can use. We have the activity-based, the life cycle, the input outflow or the outflow analysis, and also the flow accounting. So those are the 4 things. Don't forget, this one is about environmental management accounting, and these are the 4 techniques we can apply, which is the life cycle cost, the activity-based costing, the flow cost accounting, as well as the input outflow analysis. Yes, somebody's hand is up.
So can't you take the flow cost accounting for me? I couldn't get it all.
Okay, and then Rosie.
Please, what about the redefining cost?
What do you mean by the redefining cost?
I've seen that it's part of the EME techniques, but I don't understand. It's part.
Yeah, so I just want us to look at what we mean by redefining cost, and then how best we'll be able to link it to this particular question. That is what I'm asking.
Okay. But I just want to know that it's also part of the techniques.
Oh, of course,
Also
of
part.
course, of course,
Okay.
of course. Okay. Okay. Yeah, somebody asked a question earlier. You said I should go over the flow cost accounting. I think that was the question. Now the
Yes.
flow, yes. So the flow cost accounting, as I've said, it is a bit similar to the input outflow analysis. Now the input outflow looks at just the materials coming in and the ones going out. But when you talk about the flow cost accounting, we are looking at the technique not only about the material flows. So we are not looking at only the materials that come in and the materials that go out, but we also consider the organization structure. So the organization structure in the sense that we are looking at different categories, 3 different categories: the material, the system they are operating, and the delivery and disposal. So what are the costs so we have divided it into 3 parts. The cost you incur in terms of material. What system do you use to keep the materials or the records? Do you do just in time or whatever system you are operating to take your inventory or something? So the material aspect is there. What cost do you incur in terms of getting the material? What system do you keep in order to make sure that the material is well kept? And then also, what system do you use to dispose of the material? You see, it's not only about me doing just normal analysis about what comes in and what goes out. This is an accounting. It's not an analysis. An analysis is just like how many materials came in, what went out, and all of those things. But this time we are doing an accounting. So at each stage, what are the processes? What are the costs we incur in terms of material costs? What system are we putting in place to make sure that the materials come in good, or we only get the best quality of the materials we want, so that maybe there will not be breakages or something in it? Okay, so we keep them. Why do we keep them? And when we are disposing them off, how do we dispose? What system do we have in order to dispose them off? That is why we are saying the flow cost accounting is not only about materials. We look at the organization structure. What structure is in place in order to manage the material? So we are talking about inventory management system. Okay. I think it is well understood. That's fine. Okay.
Sir,
yes.
Can we include the environmental cost as also a technique?
So I would want you to justify why you'd want that to be added.
So The environmental cost also look at how to quantify the environmental impact associated with the various activities,
Okay.
like pollution, control of pollution emission,
Control of
or compliance of control of pollution
pollution.
and emission.
Yes. So that
Yes.
is
Environmental.
environmental accounting.
Okay.
That is a.
So I wanted to know.
Okay.
I wanted to find out whether we can also include that one as a technique.
Okay, it of course it is a technique. If you say environmental accounting, what you are trying to do is to make sure that you properly ascertain the costs that are incurred in whatever you are doing in order to minimize your activities in the environment or the cost you incur in terms of managing the environment properly.
Okay.
So it's a technique that you can include in order to make sure that you minimize your cost and all of those things. But you can use the activity-based costing. You can equally use what's the name? The life cycle costing. All of those things gives us a fair idea. So the flow, this thing I was talking about, the flow cost accounting, it goes beyond just the material handling. It goes beyond that. Looking at the structure in place. So that when you know the structure in place, okay, I am the one in charge of stores. The materials come in, I handle it in this way. When I'm disposing it off, this is how I dispose it. At each stage, you incur some certain cost. You see, so you can account for it properly. And then also the other one, which is what? The input output. That one is just an analysis. What comes in and what comes out, what goes out. Okay. So these are some of the these are some of the techniques we can actually adopt. I think our time is fast spent. Let us try and see if we can look at the third question. I don't know what the third question is on. Okay. Okay. So let's see if we can finish the A part of the question, and then tomorrow we will come and continue with it. Let's see. Let's see if we can finish the A part. So question 3, we are moving to question 3. Question number 3. Okay. I think you can see, everybody can see my screen now.
Yes, please.
Okay. So question number 3 says, MA Company Limited is involved in the processing of sheet metal into products A, B, and C. So you are saying that a company does what? Processing of sheet metal into products, different products. How many products? A, B, and what? And C. Using 3 processes. So in order to produce the product A, B, and C, they have processes. The first process is pressing, second one is stretching, and the other one is what? Rolling. All of these things or these stages must be what? Fulfilled in order to get product A, B, and C. So like many businesses, MA Limited faces tough prices or price competition in what is a mature world market. So you see, MA is in a very tough competition. And they are supposed to do something, a lot of things actually. If you are facing competition, what do? You are supposed to make sure that you fight competition and succeed, or bring in some kind of strategy to fulfill your objectives. Okay, so the factory has 50 production lines, each of which contain the 3 processes. So 50 production lines. Raw material for the sheet metal is first pressed, then stretched, and finally rolled. So you pass through all these 3 stages. First one, it is what? It is pressed, then it is stretched, and then it is rolled into the metal. The processing capacity varies for each process, and the factory manager has provided the following data. So the factory manager has given us the data for product A, B, and C. In fact, for the rolling, please note that this portion fall under product A, B, and C. Sorry for that. So product A has 0.4, product B has 0.25, and product C has 0.25. All of them should be here. Sorry for that. In fact, it has not been moved. I didn't move it. So these three should fall under 0.4 for A, 0.25 for B, and then 0.25 for C. Kindly note that. Now the factory operates for 18 hours each day for 5 days per week. So every day the factory works for 18 hours, and a week it works for 5 weeks. 5 days per week. Now, it is what? It is closed for only 2 weeks of the year for holidays when maintenance is carried out. On average, 1 hour of labor is needed for each of the 225,000 hours of factory time. Labor is paid 10 Ghana cedis per hour. The raw material cost per meter is 3 cedis for product A, 2.5 for B, and then 1.8 for C. Other factory costs, excluding labor and raw materials, are 18 million per year. The selling prices per meter, 70 cedis, 60 cedis, and 27 cedis for product C, respectively. MA Company Limited carries very little what? Inventory. Now, the A part of the question says we should identify the bottleneck process and briefly explain why this process is described as a bottleneck. The question is saying that there's a problem. So maybe one of the production, the production process, one of the stages may not be functioning well. One of the, what's the name? The functions or one of the processes are 3: stretching and what? Pressing, stretching, and rolling. So they are saying that we should identify maybe one of them is slacking, it's not doing the work well, or it's not performing at its optimal. And hence we should what? Find a way, or we should find that problem. Which one is not performing well? We should find it. That is the A part of the question. Then the B is also saying something else. But let's start with the A. Let's do A and see. A. Where is my pen? Okay. Let's share. Okay. A. So they have given us the total hours, but we can equally confirm it. They gave us, I think in the question, they gave us the total hours, which is 225,000 hours. But if you look at it, they told us that the number of hours, or let me say the total processing hours is equal to, they gave us how many hours do you work in a week? The machine, the factory works how many hours? 18 hours, I think, in a day. And then they work for how many hours? How many days? 5 days. They said every day the factory works for 18 hours. And then the number of days they work in a week is 5 days. And then they also told us that in the whole year, they will go for holiday 2 weeks. So how many weeks are there? So we have how many weeks? 50 weeks.
50.
And then also they told us their production line is how many? 50. The production line is what? 50. So we have 18, 5, 50, and what? 50. Let's multiply all of them and see how much we will get. Okay, so we'll get 225,000 hours. In fact, this thing has already been given to us in the question, the 225,000. If you read the question carefully, you realize that it gave us the total processing hours of 225,000. This is how they got it. Because they said you work 5 days, in a day 18, the number of weeks is 50 weeks. And then the number of production line is 50. So in all, we are going to spend 225,000 hours in a year in production. This is just a test. Now, if that is the case, then we can actually look at each of the productions, each of the, let me say, the processes. We have pressing. So we have pressing. Stretching. And then the last one is what? Rolling. So you have pressing, stretching, and what? And rolling. How many products do we have? We have 3 products, which is product A, B, and what? And C. So what we are supposed to do is that we are supposed to determine the number of meters, or the number, yes, the number of meters we can produce in these hours. In this number of hours, which is 225,000 hours for product A in the pressing department, and then also in the, what's the name, stretching department, and also in the rolling department. So the number of meters, don't forget that the products are how many? 3, which is A, B, C. So at the end of the day, you are supposed to produce A. They said it is being pressed first of all, then it goes to the stretching department before it goes to the rolling department. How many hours do you spend in the pressing department? How many, that is if you are producing product A. How many hours do you spend? How many hours do you also spend in the stretching department when you are producing the product A? And then also, how many hours do you spend in the rolling department when you are producing product A? So you are supposed to go through all these processes to ascertain for pressing, for stretching, and for rolling, so that we will be able to identify which one is a bottleneck, which one is not performing properly. Okay, so we are looking at pressing. Now, before we're able to determine the number of meters that pressing can, the number of meters that will go through, that's for product A under pressing, then we are supposed to go and check the number of hours. How many hours can we use to produce for pressing, the pressing capacity for product A? Let's go to the table. You are looking at the table, the question. Let's look at the question. Let's follow. Let's look at the table. If you look at pressing, the number of hours, the processing time per meter in hours for product A, that is for pressing, is 0.5 hours. Is what? 0.5 hours. For product B, also still under pressing, is 0.5. Then also for product C is 0.4. So if you want to know the number of units or the number of meters that you get for product A under pressing, is that you get the total hours that is available divided by the number of hours you can use on one meter of product A. So this is how it's going to be like. This is how it's going to be like. So for example, for this, for us to get for pressing, it is the total number of hours that is available, which is 225,000, divided by the number of hours per meter they give us under pressing, which is 0.5. Then you come to B, 225. How many hours is available to produce for B under pressing? Also 0.5. Then we come to, what's the name? C, which is 225,000. But this time around, in order for us to produce 1 meter, we use 0.4 hours. So if we use this number of hours, this is a 0.5, 0.4, and we have the total number of hours we have is 225,000. Then when you divide it by 0.5, we can get a total number of meters that will produce under pressing. I think it's making some sense. Let me give some space here. Okay. So the idea is that we want to get the total number of meters that we can produce, like for material product A, the number of meters we can produce or we can get when we are pressing, the number of meters we can get when we are pressing for product B, and the same pressing for product C. How many meters can we get for each? What we will do is that we take the total number of hours available for the factory for the whole year, and then we divide it by the number of hours we can use to produce a meter. So a meter, for us to get a meter is 0.5. So we divide the 225 by the meter. And this should give us, I think, if I'm wrong, you let me know, 450,000. And this one also gives us 450,000. And this one gives us 562,500. Is that correct? Okay. If it is, then let's move to stretching. So stretching, we equally use the same hours. The factory hours available for the whole year is 225. But how many hours do we use to stretch for product A? How many hours do you use to stretch for product A? I think it's 0.25. I don't know. 0.2. Let's confirm from the question. 0.25, 0.4, and 0.25.
Yes, correct. Yes.
0.25, 0.4, and 0.25. So this should give us how many? I don't know. Maybe 900.
900,000.
Okay. Then this should give us, I think, 562.
500.
500. And this should give us 900,000. Then we can move to the last department, which is the rolling department. So the same 225,000, 225,000, 225,000. So this is the number of hours available for the whole year. How many rollings can we do in a year? So we check. I think it's 0.4. I don't know. 0.4, 0.25, and then 0.25. This 0.4 gives us, I think, 5,500. This one gives us 900,000, and this one also gives us 900,000. So if you look at the data, what we have just done on the board, you could see that pressing, stretching, and rolling all have the same number of hours. See, let us understand that the pressing, the stretching, and the rolling, they all work at the same time. Whilst somebody is pressing, they all have equal number of hours. So whilst pressing is working, stretching is also working at the same time. Rolling is also working at the same time. It's not as if while somebody is working, somebody waits, no. All of them are working at the same time. That is why they all have 225,000 hours. If you look carefully, you realize that pressing wastes more time. If pressing has 220, all of them have 225,000 hours. Look at the number of meters pressing was able to get. Pressing got less than both stretching and rolling. Look at the number of meters pressing got. Pressing got 450,000, 562, 500. I'm sure when you add all of these meters, it will be less than both stretching and rolling. So you realize that pressing is not working at a level that is acceptable. It is far behind.
All right.
Okay. So you realize that if you look at the number of meters that pressing was able to get, stretching was able to get, as well as what rolling was able to get, then you realize that pressing got 450, 450, 560. In all, pressing is working less than stretching and rolling. So the problem in this particular organization, this particular company, is pressing. Pressing is not living up to expectation. Pressing is not living up to what? Expectation. If you look at pressing, pressing is performing below what? Stretching and rolling. So the first part of the question said we should identify the bottleneck. So we have clearly identified that the bottleneck here is what? Pressing, because pressing is performing below standard. Whilst they all have the same 225,000 hours equally. Look at what stretching was able to get. Stretching got 900,000, 562, 500, 900,000. The same, rolling also had the same thing, just that it was interchanged for them. But look at pressing. Pressing is performing below stretching and rolling. So you realize that no, even though they all have equal hours, pressing is performing less than what? Stretching and rolling. So the problem is with what? Pressing. And that answers our first question, which is what? The first question says we should what? Identify the bottleneck process and briefly explain. So the explanation is what I've just given. So we have identified it and realized that the other thing too is that we can actually use the data that has been given to us in the question. We can use the data that has been given to us in the question. So this is the data that has been given to us. 0.5, 0.5, 0.4. You realize that the number of hours it takes to produce product A in the pressing department is more than the rest. So what it means is that pressing is slow in production. Even if you don't use the computation I've done, or we have done, if you don't want to use that data to make your conclusion, you can use the data in the question itself, this particular question, to ascertain this bottleneck. And I'm explaining why I'm saying you can use the data. By not doing any computation, by just looking at the question, you can tell that pressing is a problem. The reason why pressing is a problem is that, look at product A. How many hours does, or how many, yes, let me say how many hours does what? Pressing used to press or spend on product A. It uses 0.5 hours. That is roughly 30 minutes. Then if you look at, what's the name? Product B, it also uses like 30 minutes. Product C, how many minutes would this be? Like 35 minutes or something. But if you look at stretching is using 0.25. This 0.25 is like how many minutes? 15 minutes. So while stretching is using 15 minutes to stretch its work, product A, using like 35 minutes to stretch product B, and then also using 15 minutes in stretching, pressing is using like 30 minutes on its production. So you realize that pressing is what? Using more time to produce. Pressing is using more time to what? To produce. So based on this data, if you look at the rolling department, you realize that product A is 0.4, product B is 0.25, product C is 0.25. The 0.25 is like 15 minutes. Like the 0.4, I don't know, maybe if it is 35 minutes or something. You realize that pressing is using more time to produce one thing than the rest. The rest are using less time as compared to pressing. So even if you don't do the computation that we have done, you can see from here that pressing is using more time. Whilst stretching is using 15 minutes, pressing is using like 30 minutes to produce product A, which is too much. So in the end, the number of product pressing will get will be less than what the number of product stretching is get, because pressing is slow and stretching is what very fast in production. So we have identified pressing to be what the bottleneck. The problem of the factory or the production process is pressing. I think it is quite clear to us. Okay. If it is clear, then we can move on.
Please, I have a question.
Okay.
When we identify the total hours,
okay,
by the unit,
yes,
what is the name of the answer?
Which one?
The 900, the 560, 500.
This is the number of meters.
Of meters. Okay.
Yes.
Okay.
So what we are trying to do here is that if you look at the question, let me just go back a bit. If you look at the question, they are telling us that pressing uses 0.5 hours to produce 1 meter of product A. So let me just put meters here to be more clear. Our target is that we want to get at the end of the year, how many meters, the number of hours available to all of them is 225,000. So at the end of the year, how many meters of product A can pressing do? And we have ascertained that at the end of the year, pressing will be able to get 450,000 meters of product A, because it uses 0.5 hours to produce 1 meter.
Yes.
Do you get it? So if you are using 0.5 hours to produce 1 meter, then how many meters can you get per the available hours you have? So the number of available hours is 225,000, and we are saying that you can use 0.5 hours to produce 1 meter. So if you divide it by 0.5, you can get the total number of meters that you can produce at the end of the year. So you realize that the number of meters of product A that pressing can do is 450. The same 450 for B, and the same 652,500 for C. So at the end of the day, this is the output for pressing. Pressing can produce 450, but stretching can produce 900,000 meters. Rolling can also produce like 556,500 meters. So if you compare the output for pressing, stretching, and rolling, you realize that stretching is producing far higher than pressing. And the same applies to rolling. Rolling is also producing far higher than what? Pressing. Meanwhile, they all have the same number of hours available to them. I hope it is getting clear. They all have the total number of hours available. That is what they have, 225,000. Each of them have the same. But you realize that pressing is taking more time to produce. That was what I was trying to explain earlier. If you look at the 0.5 hours, you realize that stretching is using 0.2 hours to produce 1 meter. So if you are using 0.25 hours, what it means is that stretching is actually using 15 minutes to get 1 meter. Each meter they use 15 minutes. But pressing is using 0.5, which is 30 minutes. So for pressing to finish with one pressing, they have to use 30 minutes, while stretching is using 15 minutes. Do you expect them to have the same output? Of course not.
No, please.
So you realize that stretching will have more output than what? Pressing. That is why we have identified pressing as a bottleneck, because pressing actually is not performing at the highest level compared to stretching and what? And rolling. Okay, I think that makes sense. We can move forward. Okay. So I think the next one is talking about what?
Throughput accounting ratio.
Okay, so the second one is saying we should we should determine the throughput accounting ratio. The throughput accounting ratio. Now, when we are looking at throughput accounting, it is very similar to what we call contribution, what we were doing earlier. Contribution is where we take selling price and we subtract our variable cost, and then the outcome is regarded as what? Contribution. But when we are talking about throughput, throughput is the same selling price minus variable cost is equal to throughput. But this variable cost under throughput is only material cost. It's only what? Material cost. Any other cost aside material cost is regarded as fixed cost under throughput accounting. Let me repeat that again. Whilst we regard labor cost and all of those costs as part of variable costs when we are dealing with contribution, under throughput accounting, the only cost that is acceptable as variable cost is material cost. So in order to arrive at throughput, we subtract the selling price, we subtract the material cost from the selling price. The answer you get is known as the throughput. Okay. Now the question is asking us to determine the throughput rate. Okay, so the throughput accounting. So TPAR, that is our target. Based on this preamble I've given, that is what we are going to use to get all of these things. We have also identified the bottleneck already. So we have how many products? Product A, B, because we are going to determine the throughput accounting rate for each one of them. First of all, we are supposed to determine the throughput. So what is the selling price? The selling price for A, it's in the question, how much is it? I think I remember that for C, which is 27. A is how much? The selling price for product A is how much? It's in the question. Oh, let me refer. It is in the note aspect. Note. When you go down, you realize that they said, no, that is the raw material per meter. If you go further down, you see the selling prices per meter are 70, 60, and what? 27. Okay. So 70. So we have 70. So Zachariah said 70. And then product B is what? 60. That's the selling price. So now we are supposed to only subtract raw materials, because any other cost aside raw materials is not regarded as variable cost under throughput accounting. So the variable cost for material A is 3, per unit is 3, for B is 2.5, and for C is 1.8. So you subtract these things, and then you get what we call the throughput. This should give us 67. This should give us, I think, 57.5. And then this one should give us 25. 27 minus 1.8 should give us 25.2, I'm sure. Then the next thing we are supposed to, now we have ascertained the throughput. Unlike contribution, whereby we subtract the variable cost, this time around, we only subtract the raw materials. And the answer we get is the throughput. The answer we get is what? The throughput. Okay. Now we can now go ahead and determine the throughput per bottleneck hour. The throughput per the bottleneck. So for us to get the throughput per bottleneck, so how many hours do we use to produce? We have A, B, and C. The bottleneck we have identified is what? Pressing. The number of hours we use to produce product A is 0.5. Then the number of hours we use to produce product B is 0.5. We are using the rate or the hours for what? The bottleneck, because we have identified the bottleneck to be pressing. And the hours we use for pressing for A is 0.5, for B is 0.5, and for C is 0.4. But the numerator is the throughput.
Recording in progress.
We are looking at the throughput per bottleneck. So the throughput for A is 67. Throughput for B is 57.5. For C is 25.2. So the throughput per bottleneck per hour will give us 67 divided by what? 0.5. I don't know. 67 divided by 0.5 gives us, I think, 134. Then we have 57.5 divided by 0.5. This should give me 115. And then 25.2 divided by 0.4 gives us 63. So 134, 115. So the throughput for bottleneck hour happens to be 134, 115, and what? 63. Then we are supposed to determine the fixed cost. Now we have determined the throughput per bottleneck hour, which is 134, 115, 63. Then the next thing we are supposed to identify is the fixed cost. Now the fixed cost has been given to us in the question. Total fixed cost is equal to, it has been given to us in the question in the sense that we have 18 million. The fixed cost was what? 18 million. But for us to get the total fixed cost, we are supposed to add the labor cost. The reason why we are adding the labor cost is because the fixed cost, or under throughput accounting, it regards any other cost aside raw material cost as what? As fixed cost. Just give me a second, I'm coming. Okay, sorry for that little break. In fact, as I was saying, so under throughput accounting, I think we can hear me. So under throughput accounting, any other cost aside raw material is treated or regarded as what? Fixed cost. So if you look at our question, you realize that there's a labor cost in it. If it were to be normal contribution or marginal costing, we would have treated the labor cost as part of what? Variable cost. But because it is throughput accounting we are doing, we don't regard it as what? Variable cost. So for us to, so because we are treating it as fixed cost, we are supposed to add the normal fixed cost we have plus the labor cost that is available. Now, how much is the labor cost? They told us that labor per hour is how much? 10 cedis. Labor rate is 10 cedis per hour. And then also the number of hours available for the whole year. How many hours are available? We have 225,000 hours available. So if we have the labor rate is 10 and the total number of hours available is 225,000, then the labor cost is going to be 225,000 multiplied by, so the labor cost, 225,000 multiplied by 10 cedis per hour, because they say each hour the rate is 10. The total hours is what? 225,000. So you multiply the two, we are going to get 2,250,000 Ghana cedis. So that is the labor cost. Ideally, under the normal marginal accounting concept, we would have added this thing to variable cost. But because it is throughput, I'm repeating it again for us to understand clearly. Because it is throughput, we are going to treat this labor cost as part of fixed cost. So our fixed cost is going to be total fixed cost is equal to the 18 million plus the labor cost, which is what? 2.25 million. Now the 2.25 million gives, when we add the two, it gives us how much? 2.25 plus 18. This gives us 20 million.
20,250,000.
Okay. So this is our fixed cost, our total fixed cost. We already have one, which is the question 18 million, but you are supposed to add the variable cost to it to get 20,250,000. Then now we are supposed to go and get that. What we are actually targeting is the rate per hour. We want to determine the throughput accounting rate. Hence, we don't need all of this. We want the fixed cost per hour. We were able to determine the bottleneck per hour, the throughput per bottleneck per hour. Now, we also need the fixed cost per hour because it is only hour per hour we can use. If we want to use the total cost, then we are not matching them properly. So we need the fixed cost per hour. So fixed cost per hour is equal to the total fixed cost, which is 20,250,000, divided by the total number of hours available, which is 22. Is it 250? 225,000 hours. And when you do this carefully, you realize that the answer is what? So it means that every hour, the fixed cost that we incur is 90 cedis. The fixed cost we incur is what? 90 cedis. Now, don't forget how we got the total fixed cost. Because you are treating the labor cost as fixed cost, we are supposed to add it to the normal fixed cost, which is in the question, to get the total fixed cost of 20.25 million. But we want to get a fixed cost as per hour. Hence, we divide it by what? The total number of hours. And now we get a fixed cost per hour, which is 90. And so we come here, the fixed cost per hour. So it is 90, 90, 90. So now we can determine the throughput accounting rate. For us to get a throughput accounting rate, it is, let me say this is A and this is B. So the throughput accounting rate is A divided by B. So you divide the throughput per bottleneck hour, which is 134, divided by the fixed cost. And that is how come you get what? The throughput accounting rate. Let's try it and see. 134 divided by answer gives us 1.49. Then the second one gives us 115 divided by 90 gives us 1.28. And then the last one, 63 divided by 90 gives us 0.7. So this is what the question is requiring from us. The question said we should calculate the throughput accounting rate for each of the products. See, the throughput accounting rate is 1.49 for A, 1.28 for B, and then 0.7 for C. But don't forget how we went, the process we went through in order to get this thing. We were able to first of all determine the throughput on the basis that the only variable cost under throughput accounting is the raw materials. So we subtract our raw material cost from our selling price. Whatever answer we get is known as the throughput. Then we went ahead to determine the throughput per bottleneck hour. So we are using the bottleneck as a benchmark. How many hours we are already in the A part of the question? We were able to determine what? The bottleneck, which happens to be pressing department. Now, each hour for A is 0.5, for B is 0.5, for C is 0.4. So we use the throughput divided by these hours to get the rate, to get the throughput per the bottleneck hour for each hour, how much you incur as throughput. So we get that. Then we move ahead to get the fixed cost per hour. Now, by virtue of the concept we are applying here, labor cost tends to be a fixed cost. Hence, you are supposed to add the labor cost to the already existing cost of the fixed cost in the question. They gave us the labor rate, the rate per hour, and we have also ascertained the total number of hours that is available. What do? You multiply the rate by per hour by the total number of hours available. Then you get the total cost. You add this total cost to the fixed cost that is already available, and you get 20,250,000. But that we don't end there. Our target is to get the fixed cost per hour. So that 20,250,000, which happens to be on this page, divided by the total number of hours available, gives us the fixed cost per hour. And hence, by getting the fixed cost per hour, we can go ahead and determine our throughput accounting rate, which is A. I've given the bottleneck per hour as A, and then the fixed cost per hour as B. So 134 divided by 90 gives us the throughput, the rate of 1.49. Then also this is 1.28, and then 0.7. The 0.7. Any question? Any question for me? Oh, is it very clear?
I'm okay.
Okay.
Please, can I go to the A part? I want to take a screenshot.
A, okay. I think this is A or?
Yes.
Okay.
Yes. Thank you.
Welcome. So I think the question does not end there. It's left with one actually, I'm sure. The question, I think the C part of the question says, how can we improve the throughput accounting rate? Or let me check the question and let's finish up with that one. Briefly,
Yes, as we said.
briefly discuss whether this supports the suggestion to cease the production of product C. Okay, so we are assuming, assume that the throughput accounting rate of product C is less than 1. It even happened to be less than 1 because our computation indicated that the C is 0.7. Then they said we should explain how. Yes, they say explain how MA Company Limited could improve the total, the throughput accounting rate of product C. How do you improve it? Any idea? How do you think we can improve it? Now, in fact, what's the meaning of the less than 1 throughput? If you look at the other, what's the name? If you look at the other computations we have done, one we got 1.49, the other is 1.28, and then the last one is less than 1. What's the meaning of this? Now, the meaning is
you're making a loss.
Okay,
You're making it.
Come again.
It's contribution per bottleneck. It's a contribution.
It's not profitable.
Yeah. Contribution is a contribution.
Okay, somebody has written some. It's not profitable. Okay. Okay, yes. It is not profitable, yes, but what it means technically, even though the end definition is it is not profitable, but the real meaning is that the company is not able to get a lot of throughput as fast as it is generating fixed cost. That is the meaning. The meaning is that the throughput the company is generating. Now, before you be able to make profit, your throughput must be more than your fixed cost.
I can't find the question now.
Oh, you can't find the question. Okay, don't worry. We'll share the question again. So when you have less than 1 throughput, what it means is that your throughput is not big enough to cover for your fixed cost. Look at this. Look at the.
Okay.
I think you can see that.
63 against 90.
Yes. So you see that it is what 63 against what 90. So we don't
90.
have enough. We don't have enough throughput to cover for our fixed cost. That is why we are in negative. We are less than what 1. But if you look at the rest, our throughput is more than what our fixed cost. So how we are generating? We are generating throughput, but it is not as fast as the fixed cost we are incurring. So our fixed cost is higher. We are incurring more fixed cost faster than how much we are generating as what throughput. But if you are able to generate more throughput faster than fixed cost, then you'll be getting profit. You see, that's why you see that the 134 is more than 90, and hence you are getting higher, more than 1. The 115 is also higher than what was the name? The 90, we get more than 1. But this one, you realize that it is 63 against 90. We are not covering more of our fixed cost. That is why we are in what? We are far behind 1, which is 0.7. Now the question is saying that, I think the C part is saying that, the C part I is saying that, how do we improve our throughput? How do we improve our throughput? In fact, we can improve our throughput, first of all, 1, maybe by increasing our selling price. If we increase our selling price, then that is going to give us a higher throughput. And we are assuming that if we increase our selling price, we assume that the fixed costs also remain the same. If the fixed costs remain the same and we increase our selling price, then we are going to get a higher throughput. The question is saying that how do we increase throughput? One of the ways you can do that is by increasing your selling price. Another way you can also do that is what? Try and reduce your material. The material price. So the cost of material, the raw materials, which is your variable cost in this case, when you try to reduce it, and even if the selling price remains the same and your material price reduces, you realize that your throughput will be higher. You see, you are looking at it from different angles. So either you increase your selling price or you reduce your material price. If you are able to reduce it, if you have some influence on the material price, then you can try and reduce it. If you reduce it, it will help you to increase your throughput. Another way you can also increase your throughput is by also reducing the level of fixed cost. Reducing the level of what? Fixed cost. So if you are trying, we have tried our very best to reduce our fixed cost, then of course, in our example here, if we try very much to reduce this fixed cost to, let's say, 50, if you try and reduce our fixed cost 50, you realize that our throughput rate will be higher. This will be higher. And even for C, which is less than 1, will even be more than 1 because we are able to reduce our fixed cost to 50. In that case, the bottleneck, which is what? The throughput, which is 63, will be more than what? The fixed cost. So one way you can increase your throughput is by reducing the fixed cost, or by reducing the material cost, or increasing the selling price. Increasing the selling price. So these are some of the ways you can actually increase your what? Your throughput. You can actually increase your throughput. Then the other aspect, which is the II aspect, I don't know what the question is asking us. The question is asking if the C part, the C aspect, we should reduce the what? We should reduce, oh no, we should cease production. I think that's what the question is saying. Briefly discuss whether they support the suggestion to cease the production of product C. And briefly outline 3 other factors that MA companies should consider before a cessation is taken. In fact, on economic grounds, you can see that maybe what's the name? The product C is not getting enough throughput. Since it is not getting enough throughput, you may be tempted to shut down production. That is what the question is asking you. This is about decision making. This question is about decision making. So now you have computed the throughput. You have identified that it is less than 1 for C. And they have asked you, how do you improve the throughput? You have identified or reduce material costs, reduce fixed costs, increase selling price. These are some of the things we can do in order to improve upon the performance of product C. Even if, okay, then the question is, that even if you are not able to do these things, or you have done them, you have tried them and it has not worked, would you advise that they cease production of C? And if you do, what are some of those factors that you can consider before you make that decision? That is what the question is saying.
Okay.
You realize that product C is not functioning well, or it's not producing well, it's not profitable. Let me put it that way. If product C is not profitable, the I part of the question is saying that how do we improve upon it? And we have identified 3 things that we can make, or we can institute or implement to improve upon the production of C, improve upon the performance of C rather. Now, if that is the case, and we have tried, and we have decided that, oh, even though we have implemented these things, they are not still, we want to shut down product C or the production of product C. What are those other factors we should consider before we even take the final decision of shutting down production C or product C? What are some of those things? Any idea?
So the first one that I think we should look at is the market demand and the potential, for the potential for the future growth.
Okay.
The market demand for the product.
Okay, so market demand. Okay. So we can say, can we, okay. So let me see. Okay, you say market demand, right?
And a potential for future growth.
And potential
for future growth.
For future growth. Okay. Any other? I think somebody has written something in the chat. The contribution of product C. Okay, so we are looking at contribution. We are looking, this one, our concentration is on throughput. The next one, you can also consider loss what? Related what? Sales. It could be that product C is a complementary product. When people buy product C, they also buy product B in addition. So if you make a mistake of shutting down product C, then indirectly you are also shutting down production of what? B. So you don't just go ahead and make a decision about shutting down product C. If you shut down product C, you may lose the what? The demand or the customers for the other what? Product. And hence you are supposed to consider that as well. What else are you supposed to do? You're also supposed to look at the long-term net cash flows. Look at the long term. How is the company, the product going to generate cash to the business on a daily basis? And then also you are supposed to look at what? The customer perception. When you shut down the production of a particular product, it signals to consumers that something is going on wrong. It gives you a negative. It gives the negative impression that things are not going well in that particular company, or the product is not doing well. Things are not moving in the right direction for that particular company. It gives a very bad image, negative image about what? The company. So before you shut down production of a particular product, you are supposed to consider that as well. Think about all of those things. And then the other thing you can also think about is that, okay, if I shut down, what will I use the excess capacity for? What will be made? The excess capacity. It's a question. Because when you shut down product C, do you have an alternative product? Do you have a different product that you'll be producing in place of product C? You should ask that. If you shut it down, then it means that you have excess capacity. What will you be using that capacity for? Okay. In fact, this is where time will allow us. Today, I guess, and I believe it has been very fruitful. God willing, we shall meet tomorrow to continue our conversations on management accounting. But please make sure that you revise your notes and practice questions upon questions to get yourselves ready. I pray that you will remember and recall everything that you have learned today and any other day that you learn, so that you'll be able to write and pass your exams and pass well. So see you all tomorrow. I think there are no questions. If there are questions, let me just receive them before I close. And there are no questions. Okay. If there are no questions, then see you tomorrow. The link will be shared. You can join 7 o'clock to 10 p.m. God willing. Take care of yourselves and bye-bye.
Thank you. Bye-bye.
Sir.
Thank you.
Welcome.
Thank you.